soft landing is just the transition phase from growth to a recession. And it's not the landing. There is no landing in a soft landing.
Well, you land for a little bit of the runway and then you fall off the end of the runway.
Do you always fall off though? I think this is what the question
well,
is.
I think the point that Andy's raising, which I think is an important one, is when you're looking at markets, it's not about, like, making good trades in markets is about having a view relative to the consensus probabilities, finding the situation where the probability of one outcome is higher or lower than what the consensus probability is. And when we look across markets today, you have, that very strong earnings growth priced into the market, analyst expectations for double-digit earnings growth for the next 2 years. You have, 2% inflation for forever. You have real interest rates at 2.5%. You have oil prices at all-time lows. Like, you look at that combination of things, and that is essentially, like, the cross-asset views are all in on a soft landing, that we will achieve the single perfect soft landing. And that is certainly possible. A soft landing is possible. But the question is the probability 100%? And the answer is no, and, like, not close to it. And so I think the thing that's interesting is you go through all these different markets in terms of what's priced in, which you have to do carefully, and like this is the discipline in terms of creating alpha. Is it's not just about your overall view. Is there going to be a recession? Is there not going to be a recession? Is there going to be a soft landing? Is it not? It's where are all the different probabilities of what's likely to transpire versus what's priced in, and you look at that situation and you say, odds are we going to get 12% earnings growth the next 2 years? Probably not. Probably lower. Probabilities tilted that way. Are we going to have inflation at 2% perfectly forever? Could happen. Probably not. Could be higher. Are we going to have the Fed perfectly ease 75 to 100 basis points next year? Not too much, not too little, particularly when the Treasury is fixed on being an instrument of easier policy given their long end supply. No, probably not. The Fed might have to do more to get us to the point where inflation is durably down. And so you sort of put all those pieces together, and some of those views are recessionary. Some of them are stronger than what's priced in. But that's what you have to do across this market. And I think to answer your question, why are we seeing this dynamic occur across the markets where it's sort of everything's kind of implausible? I think there's been a real reduction in cross-asset investors. Like, I think, people aren't going through the process of arbitraging essentially the macroeconomic reality across all those different pieces, because it's just not how people are investing these days.
And we